Hello and welcome to our presentation of the state of financial inclusion post-COVID-19 in Latin America and the Caribbean. My name is Lindsay Lear. I am the Managing Director of PCMI, and we're thrilled to bring you the results of this study we conducted this year alongside Mastercard with the objective of understanding what is the state of financial inclusion post-pandemic and post the whirlwind of digitization that the region went through, and really understand what are some key lessons that we can replicate and learnings that we want to absorb to continue the journey towards ultimate financial inclusion in the region. So welcome, and let's get right into our content. Quick legal notice, please make sure that you're using any information that you receive today in coordination with many other sources and making sound business decisions, no matter what challenge you're facing. Okay. Again, just to quickly introduce myself, my name is Lindsay Lear. I'm the Managing Director of Payments and Commerce Market Intelligence, formerly known as America's Market Intelligence. And we are a leading consulting firm focused on the payments industry in Latin America, laser focused on digital payments and understanding the trends that are taking place in the region. And I'm very pleased to be joined by Marcela Carrasco, Head of Financial Inclusion for LAC at Mastercard, who helped us develop and roll out this study. So welcome, Marcela.
Thank you, Lindsay, for the introduction. It's a pleasure to be with all of you during this Financial Inclusion Week, and it's an honor for me to be sharing this panel with you, Lindsay. At Mastercard, we understand our business has an important role to play in society and are committed to collaborating with private sector businesses around the world, as well as governments, multilaterals, and nonprofits organizations to bridge the financial inclusion gap. By empowering people, we empower economies. For this reason, and because of the significant impact of COVID-19 on digitization and financial inclusion, in 2020, Mastercard partnered with PCMI to produce a report to understand the evolution, what happened with financial inclusion after the first 5 months of the pandemic. What we saw as a result of this first study in 2020 is that just within the first 5 months of the pandemic, over 40 million consumers became banked for the first time, thanks to the government subsidies paid electronically, all of the digital accounts and wallets issued by financial institutions and by all of the fintechs. As well, the lockdowns encouraged P2P payments, electronic bill pay, and e-commerce, and financial service providers of all kinds accelerated their digital innovation. So in this context, and in 2023, 3 years after, Mastercard and PCMI, we set out again to quantify and qualify the long-term impact effect of COVID in the digital acceleration of financial inclusion in Latin America and provide some lessons. On this second stage of the study, we wanted to understand what happened, what has been the evolution or the long-term effect of COVID and this accelerated digitization in Latin America 3 years after. Understand who are the people that are truly financially included in LAC in Latin America in 2023, and how ecosystem players can ensure that financial inclusion not only guarantees access, but also helps people move towards financial prosperity, financial health, and well-being. So we started, as I said before, in November 2022. We finished in January. We conducted more than 25 in-depth interviews with different industry leaders in more than 7 markets, more than 2,800 surveys, and we worked with the traditional financial entities, the entities that have physical and digital presence, and with the neobanks and fintechs, which are technology companies that provide services primarily through digital channels. So here are some of the list of the players that were part of this study. And with this introduction, I will pass the word to Lindsay so that you can share with us what has been the findings of this very powerful study. Lindsay, please.
Fantastic. Thank you, Marce. So as Marcela mentioned, we ran the study in 2020 and again in late 2022, 2023, and I've had the privilege of being part of both studies to see the progress and see the evolution. So let's dive into some of the data we got out of this study. If we go ahead, the first thing is to understand that the World Bank Findex is probably the most well-regarded and comprehensive financial inclusion study in the world, and is well known as a very strong benchmark to understand financial inclusion globally, not just in Latin America. And so what we were able to do, their latest edition of their study came out in 2021. And so what we were able to do is really map Latin America on the global scale, comparing and then looking what the gaps are and looking where the region is. So in 2021, we can see that Latin America is a little bit behind in some areas compared to the global average, and that we do have, although not everywhere, right? It's interesting to see where we have some gaps, but it is interesting to observe some gaps in financial inclusion when looking at different demographics. Women compared to men. Here we have the gap in financial inclusion, or the unbanked population. So 30% for women, 23% for men, indicating a gap that we want to begin to look at and address, compared to 26% and 22% at the world level. And so men are pretty much on par with the global level, women a little bit behind, but not an enormous gap from the world level. But what is interesting is that demographic gap that we observe. Similarly, when we're looking at higher income and lower income consumers, employed and unemployed. So we can consider Latin America relatively on par with global standards, and we saw a major jump in catching up to the world standard from 2020 to our study in 2022, 2023. So that's just to put us in some global context, right? Now, in order to understand the results of the study, what we tried to do, a major output of our study here was making a more comprehensive and nuanced model to understand financial inclusion, right? The World Bank does a fantastic job of helping us understand banked versus unbanked, but we know that financial inclusion is much more complex than this. And we understand that ownership of a financial product does not necessarily mean usage, does not necessarily mean understanding it, and does not necessarily mean getting the true value out of being part of the digital financial ecosystem. So based on our surveys, our consumer surveys, and discussions with leaders in the financial industry, we were able to develop a model here, which comprises the fully unbanked or cash-only customers, right? No financial products within their access, operating 100% in cash, to the underserved, meaning you may have had exposure or ownership to a couple of products, but you don't fully understand and are not making full use of those products, to fully financially included. And so this model, I love it because it really speaks to the nature of how consumers are using and understanding financial products in Latin America in particular. So we have cash-only consumers, again, no access to the financial system whatsoever. The next level is what we call cash preferrer, right? You have access to at least one financial product, but I don't use it consistently. Prime examples would be folks who receive a social benefit on a prepaid card, or their payroll once a month into a bank account and immediately extract it 100% in cash at the ATM once a month. We know this is a very common behavior in Latin America. One step up from that, you become willing to try. Maybe your friend or your cousin or your brother-in-law said, hey, you should check out this app. I can send money very easily and for free. You download the app, you set up an account, and you start making some small payments to test the platform. Usually a P2P payment, could also be a bill payment. And you're no longer storing money under the mattress exclusively. You've surpassed this first barrier of mistrust, and you're starting to be open to the idea of using financial services, especially in digital format. Now, once you've become really comfortable, you then might move into what we call cash displacer. And this is the first level at which we believe consumers are truly financially included. You actually have reduced your usage of cash in favor of various digital solutions for P2P transfers, making purchases, topping up your mobile phone, paying bills, paying for transportation. You're using digital financial services now several times per month, and your cash use is going down. And from there, we move into more sophisticated categories, a true believer and a master. These are folks who are using the full gamut of financial services available to them, fully understand the benefits and the risks, are using creatively financial tools to get ahead in their life, to provide financial security and resiliency for their families, and really are looking forward to the next type of innovation that the ecosystem is going to bring to them. So this is our new way of understanding financial inclusion, hopefully providing a more nuanced understanding of the different stages one can be in their journey. And if we go to the next slide, we'll actually see how the population of Latin America, the adult population, is distributed along this model. And this is perhaps the most wonderful slide of the study, because we can really see the impact that has taken place in the past 3 years since the middle of 2020. In 2020, or just before the pandemic, we saw 45% of consumers were cash-only consumers. So just about 50% were completely excluded from the financial ecosystem. We see that population decline dramatically already 5 months into the pandemic, thanks to the massive digitization efforts that Marcela alluded to at the beginning. And that trend has continued aggressively downward to, in our study today, we see 21% are cash-only consumers. And you can look at that as massive progress. You can also look at that and say, wow, 20% of folks are still excluded. But the point here is to see this massive, this very impressive trajectory that we've seen, and that most consumers have not backtracked. We've seen this momentum only increase and continue over time. Similarly, we see a similar trend with cash preferrers, right? Those who are just, have very, very minimal access to financial products. That category also went down. What went up significantly? Willing to try, from 10% all the way to 35% 2 to 3 years later. Cash displacer also increased, although to a lesser extent. And we see True Believer and Master pretty stable. So the movement that we've seen in the past 3 years has been very impressively among those cash preferring consumers moving into the digital ecosystem. To put it in another terms, right? Over 100 million people have become banked since March or February 2020. Okay, over 100 million people have become willing to try digital financial services, and 60 million people became cash displacers and True Believers. So we've seen massive movement. And yet we still have a large population of consumers who are in limbo a little bit, not fully included. And so there's still work for the ecosystem to do to continue encouraging folks to move upward, have this upward trajectory in the ladder that we just saw. Okay, if we go on, we'll look at a little bit more detail here. What have been the most impactful products and strategies to achieving this progress that we've made? The first thing to note, as I mentioned, is that 21% of folks are still excluded. So we want to be looking at what are the strategies and the products that are most useful in achieving financial inclusion. And so by far, a simple deposit account and a debit card are both have penetration of 79%. These are the two gateway accounts that are most likely to encourage someone to move into the digital financial system. Then credit becomes that second gateway product, once you have already a little bit of experience with a savings account. Then other types of products are a little bit less, have more shallow penetration, as would be expected. So we can really think about those gateway products as being essential. Okay, if we go ahead. Another, thing that we observed in the study is the importance of the mobile payment. This is intuitive. We all know how important the smartphone has been in digital behavior across Latin America in general. But the first thing we want to observe is that there has been a significant tangible decrease in the use of cash in favor of digital services, and that has been empowered by the use of smartphones. Smartphone penetration is near 100% across the region, and so we really have the ability to access almost every Latin American adult out there. P2P payments, 81% of folks who have said to make a transaction using their phone made a P2P payment. So again, that micro, very simple and free transaction is going to be the first step. And if that first step transaction is successful, and there's no trust breach, there's no failure of the system or connection, and that person received the benefit from that, that's much more likely to encourage recurrent use. So 81% to send money, 70% to receive money. And then to a lesser extent, but still important, e-commerce, purchases on the internet, and then in-store payments are also actually, 1 in 4 consumers using their mobile phone to make an in-store purchase. So it's encouraging to see and illuminating to see what types of transactions are intuitive for the person who's coming into financial services for the first time. Okay. So as we at the beginning of the study of the presentation, you saw a QR code. We're going to show it again at the end of the session here, but you can download the full report, which contains much more detail by country and all of the survey questions that we asked. So you can get a lot more granular detail in that full report. We encourage you to download it. But with that, we're going to move on. I'm going to ask Marcela to tell us a little bit about some of the gaps and opportunities and key lessons that we've learned from doing this research.
Thank you, Lindsay. So as we have seen throughout the study, what Lindsay just presented, so Latin America has made a tremendous strides in expanding financial inclusion, and the main factors in this success have been, well, first, the ability of low-cost digital accounts and debit cards, which are the most widely adopted products. Second, financial products that save consumers time, so it's from fast digital onboarding and instant payments to virtual cards and in-app bill pay. So newly included consumers deeply appreciate the time savings gained from financial products. So simplicity and UX should be and continue to be prioritized to deliver on this need. The third one I would say is the massification of free to P2P payments this is usually the first type of transactions, and all of these newly included consumer makes free and instant P2P has been essential to send money to friends, family, so fast moving movements as well as for introducing consumers to digital financial services, encouraging them to the later adoption of other products, so that's very important. The third one has been all of these digital inclusion with social disbursements. So COVID helped to include, as we mentioned before, like more than 40 million people to the financial digital services for the first time. And the number 5 is expanding interoperability. So from the launch of all of these real-time payment systems to interoperable QRs, that is the ability to send and receive payments automatically more widely. So that's really adds value to the digital payments ecosystem. But all of these, well, has been leading us to the 75% that we have in terms of financial inclusion today, according to the fintechs in 2023. But at the same time, as you mentioned, financial inclusion in the region is still not complete. So we have 21% of the consumers are unbanked. And in addition, a high number of this group are women, low-income consumers, and people living in rural areas. And for these people in these segments, the top barriers include, the perception of that financial services are very expensive. They do not feel comfortable with managing smartphones. There is some mistrust of technology and or financial services, and there is a lack of tailored solutions and incentives for these specific segments. The other part in which we still have a lot of things to do is on credit. So more than 40% of the region still does not have access to credit, which is essential to economic resilience and upward mobility. So what we see that many consumers feel they don't have the tools to make confident decisions or understand how to use financial services to better their lives, no? So we will continue innovating and dynamic with the clear understanding that financial inclusion is multidimensional, dynamic, and multi-layered. So the next steps for the region is for all of us who are providing services to and delivering or working in the payments ecosystem is to understand the needs of these people that are still excluded enhance the incentives for adoption, and improve the quality and relevance of the services that have been offered. So connecting to these and working together with AMI, with PCMI, we identify 5 specific areas for ecosystem players to focus on to bring robust financial inclusion to the region. So I'll mention them very briefly, but Lindsay will cover them in detail. So first is prioritize personalization. So it's not talking about no longer talking about on one size fits all. So it's with access to basic financial services already being solved or being nearly satisfied. So all of us must now deliver tailored solutions to the specific delayed segments. So we were talking about women, we were talking about rural areas, and we were talking about the people who are in those levels of have low income or are in the low income segments. So that's the first recommendation. Second is center product development on credit. So throughout the pandemic, so we saw access to digital account and free money transfers were the clear drivers of adoption. So now with these products almost universal, consumers are ready for the next evolution, and this evolution means is credit. Then the third one is reconceptualize financial education, is moving from the traditional financial education that describes the products and the characteristics of the products to a more to a financial education in which is embedded in the value proposition. Is part of the product. So you learn when you start to interact with your product. It's more or less like a invisible financial education. The third one is continue with the incentives based on saving time, and create the right incentives for people to move away from cash and start using their digital products. And the number 5 is that this is private and public collaboration. So is we need to work together in order to move and to create this ecosystem and move people that already have access in order for them to start using the products, giving them the right solutions, and moving toward financial health and prosperity. So with this, I'll pass the word to Lindsay so that you can cover more in detail all of these 5, some of these 5 recommendations.
Perfect. So this is the real fun part of the study, right? Thinking about what actions can we take based on what we've learned. And, Marcia just gave a quick overview, but we want to just provide a little bit more detail here. Prioritizing personalization. This is a little bit intuitive. We know the name of the game is personalization and the segment of one when it comes to marketing. But we just want to figure out, what does this mean for financial services, right? Most fintechs and neobanks, even digital services by traditional financial institutions it's the Pareto rule, right? 20% of the effort for 80% of the benefit. Right now, we still need to focus on the last mile, right? The last 20%. And so those efforts need to be specifically tailored to that segment. And so understanding who that segment is, first of all, is important. Marcela mentioned women, folks living in rural areas, low income consumers, as well as specific niche consumer groups like college students or teenagers or those who have recently turned 18, Gen Z, Gen Alpha, who are coming of age and able to access financial services for the first time, the elderly. Who are the demographics that who are missing, and what is the gap? What is missing from their set of incentives and the value gained from participating that we need to really focus on? So, of course, and a lot of this comes down to data, doing intelligent data analysis and artificial intelligence to understand how to customize, but matching client needs with the data intelligence and tailored solutions that they need to be incentivized. Adaptation. Just the messaging and the product, how it's adapted to that person's specific profile and what is going to attract and interest them. What incentives are going to excite them to adopt a particular service for a lot of low income and rural consumers. Remittances in particular is how they sustain their personal economy. Just as an example, how can we incorporate remittances potentially into a product that will be valuable to them? And understanding their growth trajectory, how do these consumers grow, and what is the next right product match to keep them engaged and keep them interested as they evolve along this journey? Okay, if we go to the next slide. Marcela mentioned credit as being an area where we really need to focus, and this is really true for consumers as well as SMEs. Now, this study did not dive into the commercial aspect too much or the acceptance aspect too much. However, we know that banking penetration by SMEs is a huge deficit in the region. There's a lot to do there, and credit for that segment, in many ways, is what they're most eager for to gain liquidity and gain cash flow and be able to operate their business. So that's just one example of a niche in which credit has a lot of opportunity. But in general, seamless and intuitiveness, free and easy access to credit cards. This already exists in some markets, but not all markets. There's still a massive opportunity to improve credit issuing and making it more accessible across the region in multiple markets. Transparent micro loans, point of sale financing, all of these innovative ways of issuing credit, including buy now, pay later, and other types of creative solutions to give people the liquidity they need, especially in a time of high inflation, in a time of high interest rates, when they're going to need transparency and the exact product for their exact need. Going hand in hand with this, we see major opportunity for alternative credit scoring. Anyone who has large volumes of consumer data has the opportunity to innovate to help companies underwrite and do a better job of issuing loans in a secure way that will be sustainable from a price perspective for the consumer and from a risk perspective for the issuer. And contextualization, right? Offering the correct credit product for that precise moment in the consumer's life, right? Whether it be a health or education or emergency family loan versus a mortgage or a car loan or some other personal loan. It's critical to get this right and not be offering, not be tone deaf at the moment of approaching your customer and offering them different types of solutions. Okay. I love this one, reconceptualizing financial education. One part of the study that was really enlightening was a very high percentage of consumers responded that they believe financial education can help them, that they value it, it can help them get ahead, it can help them understand how to use financial tools to better their lives. There's a lot of favorable sentiment around financial education. And at the same time, a very low penetration of consumers who had ever received any type of financial education. So there's a big gap here. And I think many practitioners in the industry have struggled to understand the best way to deliver financial education. We point here to invisible education, right? Tailored to each segment's financial capability, discarding the idea of traditional courses, embedding education into the transaction flow. And that goes hand to hand with mobile UX. You know the refrain that, if the thing works and is intuitive, you don't need education. And so education and intuitive, seamless, easy UX really go hand in hand. And this advice and interaction very much showing how to use financial tools either digitally in real time or personally in real time is so impactful depending on the segment that you're working with. Okay. Leverage your convenience and create incentives. Why do we put these two together? Consumers need powerful incentives to change behavior, right? The region, it took a global pandemic to encourage millions of Latin Americans and people around the world to adopt financial services for the first time. And that was because they had very clear incentives and reasons to do so. And so we need to be very clear on the incentives we're providing for people to get into a financial product. And convenience in our increasingly hectic and chaotic and accelerated lives, convenience becomes a huge incentive. Time savings in particular, and this really goes very much for folks living in rural communities, working parents, mothers, who need to economize and be really efficient with their time, and need an alternative digital solution would really benefit them. So first is understanding what incentives are going to be attractive to the population you're reaching, and then thinking about driving convenience, continuing to drive convenience, whatever convenience means for that particular segment. Okay. And then finally is private-public collaboration. One of the key learnings was that the public sector is very influential in driving financial inclusion and digitization of payments in general. We saw this with the pandemic. We saw this with countries that digitized social benefit disbursement experienced a huge lift in financial inclusion, while those that did not get that same benefit. So this is a clear, and again, in the report, you'll have more details on that, but this is a clear impact of the participation of the government and of the state and collaboration with banks and fintechs to make those solutions available to the population. So subsidies, public transportation, and other proactive policies for cash reduction. There's many pilots and experiments already going on in the region, and so we want to encourage the private sector to get involved, and for there to be ongoing private-public collaboration towards a common goal. Okay, so hopefully that's a little bit inspiring, giving you some ideas. I'm going to turn it over to Marcela to give some final thoughts.
Thank you, Lindsay. So as we have seen in this study, we have achieved a significant progress. So 75% of Latin Americans are now financially included. However, there's still a substantial journey ahead. 91 million people still lack access to financial products. They operate in cash environments, and over 210 million people are in early stages of financial inclusion. And as Lindsay mentioned, how we move forward to include those individuals who are currently excluded segments is crucial. How we think about the products we design, how we personalize them, how we develop new products, how we develop a proposal around financial education that goes beyond the initiatives we have been working so far is vital. Financial inclusion is about working with an ecosystem perspective. No single company can do it all. We must all work in the same direction with the same vision. Here, governments, companies like Mastercard, financial entities, fintechs, and new banks, and all consumer brands, the major global players. So with this, I want to thank you all for this invitation. It was a pleasure to be here in this Financial Inclusion Week. Very proud to be here together with Lindsay. Remember that by empowering people, we empower economies. Thank you, Lindsay, for joining us. Thank you for sharing these panels, and thank you for everything.
Thank you, Marcela. Again, thanks everyone for tuning in. One final reminder, you can scan this QR code to download the full paper. We'll just leave that on there for a few more seconds, give you a chance to get out your phones and scan that QR. And if we go to the final slide, you have our names and contact information if you'd like to reach out. We're happy to answer questions, happy to go into more detail, and look forward to building the future of financial inclusion in Latin America. Thank you so much. We'll be in touch soon.